required annual financial report and disclose certain irregular transactions that raised concerns of fraud. The move comes just a day after federal agents raided offices at Taylor Bean and Colonial Bank Group following a failed financial deal between the two firms. Speaking of housing, today the National Association of Realtors tacked on another positive data point in the recent string of housing news. Pending home sales rose for a fifth consecutive month, higher by 3.6% in June. Is it enough to fuel a long-running rebound in real estate and in the greater economy, or will housing remain a roadblock to the recovery? We get thoughts from Christopher Mayer. He's Senior Vice Dean and Professor of Real Estate at Columbia Business School, and Fred Glick is CEO and President of U.S. Loans Mortgage and a licensed real estate broker. Guys, good to see you. Christopher, let me start with you. So we had the pending home sales, but we also had existing home sales, new home sales, Case-Shiller. All of these data points have been coming in positive. Has housing bottomed?
No. But we've certainly, the rate, as lots of people have pointed to other things, rate of decline has sharply slowed. Certainly, the Case-Shiller data showed a slight uptick, but we should also remember that these data come primarily from the spring when mortgage rates were about 3/4 of a point lower than they are today, and when unemployment, unfortunately, was lower than it is today. So I don't think we've seen the bottom of housing,
if it
but
hasn't
certainly
bottomed,
things are a lot better
how much
than they
further
were.
does it go down if it hasn't bottomed? And what are you talking about? You're talking about sales or price, or both?
I think sales are likely to kind of hang where they are at the moment.
Okay.
I think price is going to continue to to slip down in the second half of the year.
Wow. Okay, Fred Glick, would you agree with that assessment?
Well, I think we are at what's called a peak in the market, which is P-E-E-K, because people are just kind of looking and saying, you know, I get that $8,000 tax credit, the rates aren't bad. I think I'm going to have my job for a while, so why don't I take advantage of it a little bit? And the people who are still under the 417 loan amount, who can get the Fannie Mae programs, the FHA, the VA 100%, they're still there and they're kind of okay. Well, 11/30 of 2009, the tax credit goes away. So what you're going to see is this little rush in September and October to force people to say, you better get in right now before the tax credit ends. Next winter, I think people are going to be sitting around twiddling their thumbs a little bit in the real estate market. It depends on the area, of course,
sure.
but it's going to like dry up. The people in the $700 million range, they're just not out there. There's just not a lot of buyers.
They still can't get credit, right, Christopher?
Yeah,
That's
exactly.
part of the big issue.
Yeah,
that
exactly.
You still don't have banks lending at that level because Fannie and Freddie won't buy jumbo loans.
Right. You know, not only will Fannie and Freddie not buy jumbo loans, Fannie and Freddie are still looking for 20% plus down, or you're going to face significant costs and other fees. If you look at most mortgage loans originated, they still involve very high down payments. I think there's something in between where we are now and zero down, and until credit loosens further, I agree. I think we're seeing a bit of a sort of a blip, but unless we see some real growth out of the economy and housing credit markets opening up, it's hard to see, much of a V. It's still going to be kind of bouncing around and maybe trending down.
Fred, what's your assessment when it comes to credit? Are you seeing anybody being able to get it here?
Well, here's a little story I have. I've been working with a buyer who tried to get a 95% loan. Great credit, great income, and the lender number one that I sent it to came up with this thing. They have to have 12 months of reserves. It's like, where did that come up from? I have no idea. Moved it to lender number two, had a little problem getting the appraisal transferred from lender number one to a lender number two because of the HVCC craziness. That's another layer of this. But it is silly. These people should have been a slam dunk, 15 minutes of underwriting, hello. So it's been nuts. So the MI companies are getting real cautious. It's not just the lenders.
The mortgage insurance companies?
Yeah, the mortgage insurance companies. Cool. They've been really tough. And until they can loosen up, and I think they want to, they just can't. There's nowhere to go.
Christopher, what does this mean overall for the economy? How much of a factor, if housing hasn't bottomed, like you say, does it prevent a recovery in the U.S. economy?
Well, I still think that we're going to have to deal with the other sort of elephant in the room, which we haven't talked about so far, which is the continued growing delinquency rate on mortgages. 1 in 5 borrowers in Florida is late on their mortgage, 1 in 7 in California, 1 in 6 in Nevada, and certainly pretty high rates in the Northeast. So I think the economy is going to continue to be an issue for the banking system until they're really sure that they've gotten a handle on the losses, on the foreclosures, on the other problems, for them to be willing to open up to do lending. And so I don't think lenders yet have the confidence that, we're really out on the other side of this and, our mortgage lending problems are done. And we haven't talked about commercial real estate either.
Oh, right. That's the other big shoe to drop, supposedly. But Fred, before
right.
I want to talk about, are you seeing banks finally allow short sales? Are they getting any better at that infrastructure to prevent these things from going to foreclosure, or is that?
It's still about the same. You got to remember this, that the lenders get paid to service the loan, whether it's in default or not. So they're not really motivated to get some loans off their books that they've already sold to Fannie and Freddie. So I really don't like to concentrate on short sales. I'd rather go to a house that's foreclosed, bing, bang, boom, they want to get it off their books after that. I know the title's clear. It's just a pain. The short sales are just, it's just
the look on your face.
Yeah.
Chris Meyer, what about all these programs from the Obama administration making home affordable? Full disclosure, I got a refi. You can read about it on CNBC.com through Making Home Affordable. I can't imagine that was the intention of the program, that TV anchors would get. All I got was speed. I didn't get a better rate. I didn't get any kind of financial incentive, but no income verification and no appraisal either, Christopher.
Right. Well, I think if Fannie or Freddie has your mortgage, they already have your risk. If they can refinance your mortgage, they can and should do it. So I've been a big fan of expedited refinancings for people who the government already guarantees their mortgages.
That's me. Yep, mine was owned by Fannie and Freddie.
Absolutely.
Yep. And I think they should do that, and that's sensible policy. I've been calling for that for 6 months, and it's still. I still think there's too much paperwork involved, not too little, in that process.
Okay.
But I still think that, from a foreclosure prevention perspective, you're looking at about 400,000 mortgage modifications. The federal government, the report today suggests that they think there are several million more to go. I'm very skeptical that we're going to get anything like that.
Okay.
I think short sales themselves are problematic.
We got to go.
So it's hard.
Thank you.
Thank you, Maria.
Good to see you, Fred. See you
Bye,
later.
Michelle.
Take care.
All right, now let's head over to the NASDAQ market site where Melissa Lee is standing by with a preview of what's coming up on Fast Money. Melissa.
Hey there, Michelle. S&P